Yo, what's going on, guys? Bexio back, and today we're going to talk about the stock market. Is it collapsing or on the brink of collapse? There's been some people who've come out and talked about it, saying they think the stock market is right about to collapse, and they're saying everything's going wrong. But is it really? So obviously, we know there's a lot of people who have been talking about that. One big name person who was talking about that is Michael Burry right here. You can see obviously him. He was saying the stock market on the brink of collapse, and this article talks about Wall Street Bets users saying he was been wrong for the last 15 years, which is actually something a lot of people should take into consideration when anyone calls for a collapse. Is that the majority of the time everyone's wrong. Like, people have been calling for the stock market to collapse for years now, and it hasn't done that. I mean, just looking at this chart, obviously this is VOO S&P 500, so this just tracks the S&P and people saying that it was overpriced and stuff. This was obviously the pandemic crash, 2020 crash, and this would have been the best time to buy any stocks because you see anytime you bought here, you'd be way up right now. And listen to people calling for the crash. No one really called this because it was such an anomaly and black swan event. But even zooming back, I mean, you just look at the market overall, it just goes up and to the right. It just keeps going up. And this whole time, people have always called for crashes of the market. Back here, there's been calls for crashes when, S&P was at 100 stuff when it was coming back up, calls for crashes. And then you have to wait until you get to here where you see a little correction come down to 215, where you would have still more than doubled your money. And the people who were calling for the crashes would have said, see, told you so, when you actually just missed out on doubling your money in the market. So you have to take anyone who calls for market crashes with a grain of salt because usually they're not right. And that's just been historically for the entire market and for people calling it every single year since 2008. People have called for crashes, and people got the 2008 crash right, like Michael Burry, and he really hasn't gotten anything big recently. And that's why people would say that he's kind of fallen off more, like that he's more uh not really right with his predictions, and that falls for a lot of people who call for crashes. They're usually not right. We can look at this little article here talking about 3 reasons not to worry about a stock market crash. Obviously, the first one talking about the next crash might be a long way off, and saying, isn't the first time investors have been worried about a crash, and sometimes those concerns are warranted, like the dot-com bubble and global financial crisis in 2008 and stuff, where it was imminent that the stock market was going to fall. And had you have listened to people calling for those crashes for a long time, you would have missed out on the best bull market in history from like 2009 to 2020. It was like a 11-year bull market. It was crazy, and there were people consistently throughout that entire time period saying there's going to be a crash and it's overvalued, this, that, and the other. And now you see people calling it the same thing right now, and it just doesn't really make too much sense, especially when you take into consideration the Fed and what the Fed's done to kind of prop up the market and make sure things don't get bad for investors. And the second reason is that markets rise over the long term, and this one isn't necessarily true if you're talking about anything outside of the U.S. But uh, the U.S. market, S&P 500, has been a index that has just gone up over time and doesn't really see these big, bear markets or anything like that. And this even says bear markets are only temporary diversions from a long-term upward trend. So you can still even see that if you want to look at this. Obviously, where's a bear market? Like, you look through this, and I mean, you see maybe corrections, but this is the weekly chart, so you see a downturn for 1, 2, 3, 4 weeks, and then trade sideways for another 6 weeks before it rallies back up, and now you're back above where you were before. So I wouldn't call like 2 or 3 months a bear market. So you just see this huge, just bullish move, And then even the worst thing that could have happened, and the 2020 crash and everything that went wrong in these huge downturns, circuit breakers, everything going off, lasted for 5 weeks, if you count the up top here. 5 weeks before the Fed stepped in, started pumping everything back up, and then you see already back up to breaking this all-time highs probably a couple months later, and then just go on this, really parabolic run. It's a very straight up line where people saying everything was overvalued the whole time. And if you would have listened to them, when things started coming back, got to this point saying it's overvalued, had you listened to them, you would have missed out on this entire uptrend here. And whenever this has a correction and pulls back for a couple weeks, there'll be people saying, I told you so, but it won't pull back enough to the point where you could have got back in at, pandemic prices. And then the last point on this article says you can still get returns from when the stock market is down. And this one kind of talks about adding bonds and dividends and REIT funds, which I would say everything except the bonds really is bonds is like super secure. Like, you're not gonna lose money. You could have a negative yield if inflation outpaces the bond, which is the big problem people have right now. But looking at like dividend aristocrats, so that those are companies that have paid their dividends for 20, 30, 50 years. You just know they're going to pay them, so they got good businesses. REITs is like real estate stuff, and even that right now is like murky water. People are going to be up in the air about that, but definitely, even when markets are down, you can use it as a time to get dividend stocks and have them pay you, so you can still make money every, whenever they pay their dividend. You can do the REITs, which also pay dividends, and that's more real estate based, and people just say real estate stable and stuff. So there's still ways to make that, as well as if you have the money, or if you have 100 shares of a stock, you can sell covered calls, covered puts, and try and make money that way. Obviously, that has a little bit more risk to it than doing like, just buying dividend stocks or buying equities. So, but the big reason that people are scared of this downturn and seeing things in the market really start to see another crash is obviously the Delta variant and the upset of lockdowns coming back as a possibility. And that's something that obviously Wall Street worries about. This is something that, maybe can happen, maybe not. Who knows? You can't predict the future. But the one big thing about the difference between now with a lockdown or something happening and the market freaking out, the reason the market freaked out like this and took a huge nosedive was, yes, the pandemic, all this stuff, lockdown, economy stuff, worries. But then the Fed stepped in and pumped everything back up. So even if there's lockdowns and we see, economy struggling and stuff like that, the Fed is already in place. And I think that they would just pump more money in and start to do more things. So maybe you see a little drop, like, a little correction where people say, I told you so. But the Fed's going to step in so quickly that it's not even going to matter. And it's going to be so short lived. And the rally will continue because confidence will come back. That's what happened here. This huge drop. The Fed stepped in, interest rates to zero, and they pumped money in and continue to buy bonds and stuff every month. And the confidence just came back in the market. And the saying is, you can't fight the Fed. And that is so true because they have unlimited money. So they can do whatever they want. So in the market, if you want to prepare for something like a downturn or whatnot and things like that happening and you're scared, I wouldn't try and time the market. Like a lot of people might say sell now, but then you miss out on if it doesn't go down. There's your big problem. So the bigger things is if you're investing money now, that even people like Kramer and Mad Money talk about, obviously the ones that did good last time, Walmart, Amazon, Target, Costco, Home Depot, the retail stores and stuff, and retail, because people are always going to need stuff. So getting into those stocks are something that you can think about and kind of have more confidence in than other things. Maybe big tech, things like that, where it's like super secure. They're not going to go bankrupt. The riskiest things would be recovery plays, the cruise lines, airlines, things like those. Because this first round, they took on a bunch of debt to be able to stay in business and not go bankrupt. So if something happens again, taking on that much debt might not be a possibility for a lot of these companies. So thinking about another crash or something on the horizon, most likely probably not, but anything can happen. I think that the Fed would step in way too soon to let anything really get bad and just start pumping money in again to make sure everything stays stable and can not drop, because that's the biggest worry for any investor and anything that the Fed has in mind. So that the confidence is there. It's definitely going to be on the mind of the stock market for a while, and the only way to get over it is to get clarity on what's going to happen and just kind of go from there. So we'll wait for clarity to happen in the market. As always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.